G'day, Jarrad. How you going, mate?
Yeah, really good, Todd. Great to be on the podcast. I'm a fan of the show, so
Mate,
I get to hear myself now.
it's great to have you on the show. Well, I feel like we've been neglecting Perth a lot on Pizza on Property, and you're a man that's got your finger on the pulse on both the sales market, the rental market, data drivers, and I just thought we've got to have you on for a little bit more of a detailed update. Well, as detailed as we can get on a weekly slice. So if you don't mind, mate, can I just jump straight into the questions?
For sure.
Easy as well. Look, why don't we start with the sales side of things? What are you seeing on the ground in the Perth sales market?
Well, it's crazy times. We've just reached an all-time low of 5,084 properties for sale, and to give you some idea, that's 39% down on the same time last year. And last year we thought we had a tight market. Now it's just ridiculous, and this is the lowest level that I've seen in my 15 years of being in real estate, and some of the lowest numbers on any kept records. So crazy tight levels of stock. And we're also seeing on the demand side that demand's continuing to keep really high, and there's around 900 odd properties getting sold each week, and that's keeping pressures on the overall inventory levels to keep heading down. And
did you say 30? Sorry to interrupt you there, Joe. Did you say 39% less stock? What than this time last year?
Yeah.
What do you think's one of the causes of that? Just to quickly jump in, because that's a huge cut.
Well, it's a combination of, with our rental market being so tight, a lot of homeowners, when they go to want to change over properties, they can't go and rent in the meantime. So they're very stuck and not putting their properties on market.
Yep.
And then when we also look at the fact that the market's so tight, they can't make a subject to sale offer because they're up against multiple other offers at any one time. Someone, if they can't rent and they can't make subject to sale, they often can't sell at all. So that's keeping the stock levels very low, and that's how the rental market intertwines and affects the sale market as well.
Interesting. Okay, and before we jump into the rental side of things, is there anything else on the sales side that you reckon is really of interest to property investors looking in the Perth market?
Yeah, well, I see a lot of investors, and especially ones that are interstate, making decisions based on top-level median house price data. So if you look at how the median house price has changed according to the Real Estate Institute WA, we've only gone from 540,000 to 560 over the last year. So, not even sort of just over 5%, nothing exciting. And you'd be, if you were just making decisions on the top level, you'd probably be hanging back and thinking that Perth's not really doing anything.
Yeah, you think
very
nothing's
much
happening.
still. Yeah, exactly. And this can be the trap that people fall into, because when you go deeper at the suburb level, we've seen anywhere from 20 to 50% growth on where the bottom end prices were over the last 3 years, pretty much across the majority of suburbs. And then people might say, oh, well, is there any more value to be had? And is there any more upside if the growth's actually been that much? But when we actually look back, we're only 10 to 20% above the previous highs in the majority of suburbs.
Interesting.
So that's comparing to the highs that we had in 2014. So we did have a pretty down period. Median prices really took a tumble, and it was a case of those that needed to sell their properties were getting out at whatever price that they could sort of get. And so anyone that's entered in Perth over the last 2 to 3 years has done very well, but properties are still so undervalued compared to the other states, and the rental yields are supporting of further price growth as well.
I'm mindful of time here, mate, but I've got to ask, like 540 to 560, what's dragging it down? Is it property types? Is it a few like suburbs? Like what's happening?
Yeah, what's happening is with rising interest rates, it's actually having homeowners and investors seek more of the affordable options at the lower end of the market. Investors are chasing yield.
Okay.
Homeowners are chasing a lower monthly mortgage payment. And because the sheer number of transactions is so much higher at the lower end, it's keeping that median house price low, and volume that's being traded at the upper end is very tight.
Mm-hmm.
And so even though there's growth, there's much lesser transactions, and it's tilting the median right towards the bottom.
Gotcha. It's like sometimes in rural areas when you see someone sold like a massive farm and all of a sudden technically the house price has gone up 300% because it was the only thing that sold in the past 6 months. Yeah.
Median can really be distorted.
Gotcha. Okay, mate. Well, as far as the rental side of things, is there anything else you really wanted to add on to that before we get into a couple of key drivers wrapping things up?
As well as having a tight sale market, we've got the tightest rental market on record too. That's just 1,647 properties, and that's a further 7% down on the same time last year. And the vacancy rate's at 0.6%, so it's just crazy tight out there. And with the median rent at $600 a week, we're still getting a very attractive rental yield on the average purchase price. So if you're going out and buying something at 500K, you can expect a 5.5 to 6% rental yield. And when you compare with the other capitals around Australia,
it's huge.
That's very decent.
Yeah, absolutely. And so are you still finding like it's actually possible to get positively geared in Perth? Because I feel like that was a bit of a 2 years ago thing now.
Look, it's certainly much more possible to break even. And when I mentioned the typical yields there, you can certainly readily get a 6 or a 6.5% if you've got something that's a bit more of a desirable house component instead of a full land component or something that's developable where you've got lesser house to rent out and be achieving that extra return.
Yep.
And then there's plenty of people chasing extra twists with granny flats or dual key or other twists to increase those rental yields. So it's possible with a twist to be positive cash flow and certainly break even.
And just quickly,
otherwise,
grannies, because I know that there's some BAs out there like doing a few grannies. I've done a granny deal myself. Like, are you still finding good demand with them as rentals?
Oh yeah, as long as it's set up properly to have a private rentable space where one doesn't interfere with the other, and if it's set up properly with services and privacy, then you're easily going to be able to find a tenant, especially in this market.
Awesome, Jarrad. And I think we've got about 60 seconds left on the clock, man. Is there any sort of key drivers that you wanted to highlight for anyone listening now considering Perth as a potential rental market?
Perth's actually had the highest average, increase in percentage terms of all the capital cities with 2.8% population growth over the last year. So that's driving both rents and the sale market.
Fantastic. 2.8%. So the highest out of everywhere.
Yep. Highest of all the capitals.
I would not have picked that. That's okay. Anything else that's a key driver?
Look, because of our underlying fundamentals being so solid with a low unemployment rate, we've got the highest average income. That's why these migrants are all coming here. And when you couple all of those solid fundamentals with that high rental yield, we're getting a lot more investor interest as well that is driving the market. But underlyingly, the economy is very sound, jobs are good, and people are moving for the jobs.
All right, Jarrad Mahon from Investors Edge Real Estate. Thank you so much for jumping on the show and giving us an update, mate. Really appreciate your time.
No worries, Todd.